We go live there every day trading the markets, covering world news, and talking through setups in real time. Hit subscribe so you don't miss the next session.
Still doom scrolling? Brain rot taking over? You'll focus tomorrow, right? But what if tomorrow never comes? What if it all started with one small choice? The world won't wait for you. Opportunity is moving right now. One decision is all it takes to shift your momentum. Fuel your mind and watch possibilities open up. Small wins stack up, focus sharpens, growth begins. Everything changes the moment you focus. Lock in and make the switch today. Bring your ambition into focus. Trade with Switch Markets.
Are you still trading everything manually? More traders are moving to automation, running strategies 24/7, removing emotion, and staying consistent. Now with Switch Markets, you've got the tools to build and run your own automated trading systems, so your strategy delivers even when you're asleep.
Meet Switch Markets, a broker for ambitious people who want to trade the financial markets.
You mean that I can trade things like Forex, stocks, even gold with you?
Yes, you can even trade the coffee bean market with us.
What about digital currencies? Can I trade them too?
Absolutely. Maybe now's your time to get in.
Oh, and are you regulated?
Yes, we are.
And how easy is it to deposit and withdraw? Will you charge me any fees?
It's easy. Deposit and withdraw instantly. Nice and simple. And unlike that guy, we won't grab any fees from you.
Do you have a low spread trading account?
We certainly do. Pick from our zero commission or our low spreads account. It's up to you.
Okay then, what makes you so different from every other broker out there?
Our 5-star rated real human customer support and our perks package worth thousands. No other broker can beat it.
So, who did you say you were again?
Switch to success. Trade with Switch Markets.
Getting started in trading shouldn't be complicated. You can open an account, get set up, and be ready to go pretty quickly. Now, if you've been thinking about it, take a look. Click the link in the description below. You can even start with a free demo account.
In trading, like climbing, the hardest step is to pause, hold, and trust your position. Ambition pulls you forward. Focus keeps you steady. Together, they take you higher. Bring your ambition into focus. Switch Markets.
Already trading with another broker? Fair enough. But if you haven't looked around lately, you might be missing out. Now, Switch Markets is picking up awards, offering tools most brokers don't, and their support actually shows up. It might be time for you to switch to Switch Markets. Click the link in the description below to get started today.
Discipline starts before the first punch is thrown. Focus sharpens in silence. Repetition builds control. Every movement prepares you for the fight ahead. Trading isn't luck. It's preparation. It's grit. Your fight is won long before the bell even rings. Champions trade with Switch Markets. It's time to bring your ambition into focus.
Are you still with the same broker? Now, there are better options out there. There's more tools, better support, and a platform built for traders. It's time that you demand more from your broker. Take a look at Switch Markets. Hello, everyone. Welcome to FOMC Live. I'm Shane Vernier, and today we're going to cover Kevin Warsh's his inaugural, his maiden voyage as Fed chair with the press conference. We've got some interesting headlines, though. The first thing that jumps off the page is that rates have been held steady. There hasn't been a rate hike. There hasn't been a rate cut. We didn't expect one. But Warsh also came out with a dramatically smaller written statement than we usually have been getting, that we're used to getting out of Jay Powell. So we're going to see a little bit different mechanism. It's going to be a little bit different animal with Warsh. It's going to potentially be a little more clear, maybe concise, maybe brief. So I don't exactly know what we're going to get. We know that Warsh has been outspoken. We know that he doesn't want to give as much information about policy as the previous administrations have. I think it's going to be fascinating. And right now, the markets are taking it hawkish. You're looking live at the DXY. This is the U.S. dollar index. We're up about 0.5% on the session. So the market really is rallying. The U.S. dollar's rallying on the back of what is being seen as a fairly hawkish initial statement from Kevin Warsh. So I want to welcome everybody back to the trading room. I think it's going to be a lot of fun today. We're going to cover Warsh's comments live. Daniel, good to see you. Let the games begin. That's exactly what I say. I've been probably one of Jerome Powell's biggest critics over the past several years. We've done a lot of these FOMC meetings, and it never ceases to amaze me how little Jerome Powell could say over the course of one of these engagements. I think Warsh is going to say a little bit more. So we just got to wait and see. We got to dig in. I would say the presser or the show really begins here in about 9 minutes. So we're going to go over some key levels, talk a little bit about what to expect, and look at the actual written statement that was released. So more of all, good to see you, Daniel. Always a pleasure, Daniel. Treehawk over in the How to Trade community. Good to see you, Tree. Ralph H. Hey, Ralph. I'm confident everybody's doing well. Tuku, good to see you as well. All right, everybody. Big question is, who is Kevin Warsh? Well, Kevin Warsh is a rich guy, essentially. Harvard Law. Is this somebody who's been on the Federal Reserve before? He served back during the monetary crisis of 2008 to 2012. He was a big proponent of TARP, which was a highly controversial economic plan designed to get the United States out of a recession, out of a depression, essentially. So we've got Warsh, 56 years old, fairly young guy, actually, to be doing this kind of job. He's from Harvard Law, so he's a American financier and attorney who has served as the 17th chair of the Federal Reserve. His net worth, I didn't get into that. I think he's going to be the richest Fed chair of all time, though. I believe he had some stock options. I don't know if he had SpaceX or not, but that is who we're dealing with now. And this was Trump's pick. He was approved by Congress in relatively short order. He's brought in to cut interest rates and be a dove. Now, whether or not that happens, we don't know. We don't think it's going to happen just yet, but we're going to be watching relatively closely. Here is the first interest rate decision from Warsh. Fed holds rates steady, pares down statement to remove cutting bias. Kevin Warsh's first meeting as the Federal Reserve Chairman concluded Wednesday with no change in rates and removal of key language indicating a bias toward future cuts in a dramatically shorter policy statement. Long story short, there's a new sheriff in town, and business is going to be done a little bit differently. Short statement, love it. There's no reason to waste everybody's time by writing a book and try to be a statesman like Powell was. Powell found himself making extraordinary long statements. Warsh, let's get in there. Let's get right to the point. Let's take a few questions and call it a day. Remember, these events can drive markets directionally any which way but loose. So we've got to definitely be aware that the longer that these things go, typically the worse it is for the markets. We've seen that over and over and over again with Jay Powell. I'm looking for clear, concise, complete, and very, very brief and potentially even aggressive words from Kevin Warsh. So after Warsh is done talking, we'll check in with our CME FedWatch Index and see if there's any real changes in expectations for the end of the year. But getting rid of the rate cutting bias language is big. That means that all of a sudden they're hawkish, has to do with the Iran war, potentially higher energy prices and inflation that has stemmed from the war. That's it. That really is it. Kirsty, good to see you. Kirsty, welcome. Tina Jing, good to see you. Tina, yeah, giant candle. We've got a big one. We've got a big one right here for the U.S. dollar. You can see 99.96. We're still in rotation, right around that 100 level for the DXY. So if you are interested in trading the DXY CFD, 101.18 is the big one. That's the line in the sand, 38% of this monthly range, which we've seen really since the inauguration of President Trump. You can see the big sell-off. The idea was rate cuts were coming. Dovish policy was coming. Hasn't happened. Why hasn't it happened? Well, the war. Essentially the war. Some of it was Jay Powell not really wanting to cut interest rates, but a lot of it has been the Iran war, and inflation has just been sticky. Our story of the week. SpaceX been on a roller coaster ride. We had a great big rally yesterday up to about $225 per share, and then we rotated right back down to 200. Today, we washed out the 200 level. We have an inverted hammer candle on the daily. You guys know how I feel about hammers and inverted hammers, warm, fuzzy feeling. They're potentially reversal signals in my book. Anytime I see a hammer or an inverted hammer, I pay attention. This was fascinating. Inverted hammer, that's an upside-down hammer. It's going to signal bearish price action. We've got a pretty good sell-off, tested the waters beneath yesterday's low, and have now bounced. So is SpaceX coming off big? I don't know. I don't know about that just yet, but a hawkish policy may, in fact, hurt SpaceX a little bit, at least in the intermediate term. Gold, I know everybody wants to see gold, so let's get right to the game plan. Here's my long-term Fibbies for gold, Fibonacci retracements for gold. You can see it's been a flat market for about the last 60 days. It just has not been overly active. For today, we're going to take it down to real small time frames as Warsh is speaking and potentially get in on a couple Fibonacci trades. But for right this minute, it's in a holding pattern. Would we be sellers from 44.37? I think that's a pretty good idea. Are we buyers from 50% down there? I'm not, but I do like buying 4,000. That proved to be a very solid trade. 4,025 was a great trade that developed, I believe, earlier this week. And then you've also got our moving average, which we've traded, not religiously, but relentlessly as it's come into play. Daily chart, what do you have on gold? It's just tough, guys. It's sort of a reversal, a nice head fake above yesterday's high, and then we dove beneath yesterday's low. This is something that is really problematic for us as technical traders. When you're looking at that megaphone formation where price action isn't getting smaller, it's getting bigger, you've got a problem. You've got a problem. It can be really difficult to figure out exactly where we're going next. Downside support, I love it down there, that area. I hate 50%, but I think in this instance, 4,075 sort of already saw that demand zone set up. Got a chance to bid down there if we do get the opportunity. For right this minute, we've got a couple of levels potentially we could look at, but I got to tell you, I am not in love with these technicals at all on gold. It's been a really tough market to put our finger on. Maybe 42, maybe 4,243, somewhere in there might be a good trade as Warsh is talking. We just got to wait and see exactly what he says first. Swiss franc bounced off a 50% level. This was a really strong support zone that we have down there. Right now we're trading about 79.65 in the Swissy. I really love 78, 75 to 78.85. So about 80 pips down there. Maybe we get a shot at it tomorrow after the S&B, but that's definitely a support zone that I would have my eye on. I think that it could be a catalyst for a very fine trade. U.S. dollar, Japanese yen, BOJ raises interest rates, doesn't do anything for the yen. And right now, what are we looking at? 2026 is high. That would be my point, really the inflection point in this market, potentially. Top side resistance. Definitely stay in that league. You want to be right around there if you're interested in maybe taking a short. For me, it's just sort of a holding pattern for a lot of these. Great Britain pound, Japanese yen. This one's pretty good. We've got a sell signal setting up on the 920 EMA crossover. The 9 has crossed under the 20. Potentially that's a sell signal. So that may be one that we get live on potentially later today. Have that on your radar. Great Britain pound, Japanese yen, 4-hour 920 EMA crossover. Could be a real beautiful opportunity. However, I don't want to burst anybody's bubble, but we have 2.5 more hours before that one sets up. Let me see EP. Good to see EP. What is your sentiment on gold? Yeah, I got no sentiment, man. I got really no feel. I mean, this is a market that's really ugly. So I got to see it move. I got to see it get out of this area of disequilibrium right up around 4,300. Maybe give us a chance to buy 42.50s, 42.43, somewhere down in there. Market has to do something. As far as what we're going to be looking at, we'll pull up a 1-minute chart here for gold. Potentially see if we can get any kind of trade at all. That's for sure. Let me see. Daniel, yeah, I think we will flush the late USD buyers out next week, Monday, Tuesday, and go long Wednesday, Thursday for the real move. I think it's possible. Nathan, US 30 buy or sell. Yeah, sure. Let's go. We'll get the US 30 up and running right here. We do have Mr. Warsh is going to be taking the stage here at any moment. So let's go ahead and get out to the action. We'll get our, you got to love the Fed. They're going to give you soft elevator music as they potentially bury the economy. But we should be seeing Warsh any minute. All right, here we go. US 30. All-time highs. I'll be looking to buy pullbacks. Weekly charts, one thing. Let's go to a daily. See what color ties Warsh is wearing. Powell always went with a purple tie. If you guys can hear all right, that would be good. Joshua, looking for a pullback in the US 30 there, Nathan. Somewhere right around 51.278, maybe 51.80. Well, there's the man of the hour.
Good day.
It's the new guy.
It's an honor, a true honor to be back at the Federal Reserve and to take up this duty at a time of such consequence. I've been especially heartened by the warm welcome of old friends and new colleagues both. And I've listened closely to my fellow FOMC members, heard a lot of new ideas, new thinking, and genuine interest in moving the Fed forward. This week's FOMC meeting exemplified the very best of the Fed's traditions: rigorous debate, open-mindedness, commitment to mission, responsibility, and accountability for performance. In this business, they all add up to one thing: getting monetary policy right, or as near to it as we can do. That is our North Star. My colleagues and I are here to serve our legislative remit, which you've heard us say before: price stability and maximum employment. And these objectives guided our business in the meeting just concluded. As you saw a few moments ago, the committee decided to maintain the target range for the Fed funds rate at 3.5% to 3.75% in support of the Fed's dual mandate. The committee also reaffirmed its policy of maintaining ample reserves in the banking system. Economic activity is expanding at a solid pace, despite elevated uncertainty that owes in part to the conflict in the Middle East. Productivity growth and capital investment both strong. Job gains have kept pace with the workforce, and the unemployment rate has changed little. We recognize that inflation has been running well ahead of the Fed's long-stated inflation goal of 2%. That's been going on for more than 5 years. Persistently high prices are a burden for the American people. But the recent past need not be prologue. I am pleased to report that members of the FOMC are unambiguous and unanimous. This committee will deliver price stability. At any institution, a change in leadership is a natural and timely opportunity to reaffirm its mission, to review current practices, and to consider whether those practices best meet our objectives. My Fed colleagues and I will be working in close collaboration to ask what changes might improve the conduct of monetary policy. On that score, you might have already noticed something, a difference in today's policy statement. It's a bit shorter, a bit simpler, and it dispenses with some older language. That statement just gives you the facts as best we can judge it. Absent also is so-called forward guidance, which we agreed was not well suited to the current policy conjuncture.
Wow.
This afternoon, you also received the usual summary of economic projections. It's been the practice of this committee for participants to submit these projections, and I have encouraged my colleagues to continue to do so. I, however, have refrained from offering any projections of my own, consistent with my long-held views on the SEP, at least as currently structured. In the median projections, real GDP rises at 2.2% this year, 2.3% next year, and total PC inflation runs at 3.6% this year, 2.3% next year. The unemployment rate stands at about 4.3%. The median participant judges that the appropriate federal funds rate to be at 3.8% at the end of this year and 3.6% at the end of next. Let me turn now to a few words on a key initiative that we're announcing today. I'm appointing a task force in each of 5 areas that are central to the broad conduct of monetary policy. First, Fed communications. Second, the Fed's balance sheet. Third, our use and reliance on existing data sources. Fourth, productivity and jobs in an era of transformation. And last, the Fed's inflation frameworks. These subjects are timely, consequential, and in my view, worthy of a fresh look. My colleagues and I discussed them with energy and purpose over the last couple of days. For each of these independent task forces, I'm enlisting some of the very best minds, both inside and outside the economics profession. They will be supported by subject matter specialists from our superb Fed staff. And they'll have a straightforward charge. Start with first principles. Ask hard questions. Examine current practice. Consider alternatives. And ultimately propose next steps for policymaker consideration. Since last summer, my colleagues discussed possible improvements in the form and function of Fed communications. This new task force will build on that effort, and I expect propose some well-considered changes, including to the SEP I mentioned a few moments ago. The second task force, the one on balance sheet policy, will review the benefits and risks of the current ample reserves regime and the composition of the Fed's balance sheet. They will assess alternative frameworks for the conduct and operation of monetary policy. The third task force, the one on data, will evaluate new information sources and consider methodological changes to improve data gathering, with the aim of giving policymakers more accurate, relevant, contemporaneous, and perhaps most important, actionable information on the state of our economy. Fourth, the task force on productivity and jobs. It'll survey the pace, the reach, the economic impact of new general purpose technologies, including AI, and explore the implications for the Fed in pursuit of our employment and inflation mandates. The last task force, the one on inflation frameworks, that'll examine the drivers of inflation, first principles, and weigh the full range of ideas for delivering price stability in a changing economy. You'll hear quite a bit more about these task forces and this overall initiative in the coming weeks. Enough for now to make a simple statement. Each task force will serve an objective shared by everyone in the system, shared by everyone around that table that I sat with over the last couple of days. A Federal Reserve that is clear-eyed about its mission, fit for purpose, and focused on the future. And with that, I appreciate your attention. I'm happy to take your questions.
Howard Schneider.
Hi, Chairman Howard Schneider with Reuters. Good to see you again, and welcome back. This is a lot to be putting in motion so fast. What is the timeline you have in mind for each of these?
So I think it'll depend on the task force. It also depends on the urgency in which we need clear answers. My expectation, I'm still in the business of recruiting and finalizing them. My expectation is the task forces will begin work in the next couple of weeks, and we'll start to get some more information from them, some more framing of how they see things starting in the fall end, hopefully most, if not all of them, concluding by year end.
And just specifically on the inflation framework, you talk about first principles. Does this include a review of the 2% target itself? You've mentioned that things to the right of the decimal point don't matter. Should this be starting from a premise that 2% as a point estimate is too strict?
Let me break that into two pieces. First, on the inflation framework review, their remit is what are the drivers of inflation? What's the Fed's responsibility for inflation? In part, how do we measure inflation? But that'll overlap with my data group. On the 2% inflation objective, that is the Federal Reserve's long-held objective of 2%. You've heard me say before, I tend to focus on the left of the decimal point. Well, the 2 is the left of the decimal point. For now, 0 is to the right. I see no reason until we have reestablished our commitment and ability to deliver on the 2% inflation objective to revisit that. So that'll be outside the scope of what we're taking on.
So they're not going to mess with
Thank
the,
you so
the
much. Colby
inflation
Smith from the New York
metrics.
Times. You've in the past said that inflation is a choice, and in the policy statement, it includes this pledge to deliver price stability, as you've reiterated today. But looking at the SEP, the bulk of your colleagues expect core PCE to run around 3.3% by year end, and for the 2% inflation target not to be reached until 2028. So I'm curious how patient you think the Fed can afford to be at this juncture in terms of waiting for one-time inflation waves to wash through and for underlying inflation to step down after so many years of inflation running above target, and under what circumstances you would support the Fed taking some action and raising rates.
Sure. So quite a bit there. Let me try to break that into pieces. First, we have the capability and commitment to deliver on our price stability objective of 2%. That's exactly what we're going to do. In the Fed's review of its strategy over the last any number of years, in January, the Fed, including the strategy that we're still bound by, the Fed statement says that inflation is primarily determined by monetary policy. You bet it is. I've said for years inflation is a choice. You bet it is. And today I'm announcing that this committee unambiguously and unanimously have decided we are going to deliver on that. The rest of your questions sounded like a encouragement for me to give forward guidance. We've dropped forward guidance. Some along the committee, I think, dropped it, I suspect, from our discussion the last couple of days, because they said at this moment in time, it doesn't feel as though providing forward guidance is right. Others have, I'd say, different views and think as a general proposition, forward guidance isn't the business we should be in. But that'll be taken up by the Task Force on Communications and my policymaker colleagues. We're going to listen hard to what the experts say and make our own decision. But I can't give any forward guidance about what we're going to do next. The good news is we'll be meeting in 6 weeks.
So just following up, I guess, on the current policy settings, then I am curious how restrictive you think things are at the current moment, given the flow of data that we've seen and forecasts that are coming down the pipeline.
Yeah. I've heard characterizations both inside and the Fed about that. I'll give you my own. It's uneven. If I look at the housing markets as one example, Fed policy isn't the single determinant of the state of the housing market, but broadly I would say Fed policy appears to be somewhat restrictive. I would have a hard time managing to say those words if I were to see what's happening in financial markets. So I'd say it's uneven. That's perhaps a function of different transmission mechanisms of monetary policy, whether monetary policy is coming from our interest rate tool or our balance sheet tool. But the good news, we have a task force on that too, and the balance sheet task force will be looking more at that subject.
Got a couple of things to say on forward guidance afterwards.
You said you don't like forward guidance. You dropped it from the statement this time. But with the dot plot, 9 members suggested that they want a rate increase by the end of the year. And the markets have taken that as forward guidance. So what does this mean in terms of how you guide the markets and in terms of what the dot plot's future is?
I'm going to have to give you the same answer I gave to Ms. Smith. We've got a task force for that. I'll give you a little bit more. I reviewed the dot plots, and when I saw the submissions, I noted that all the submissions were coming in with pencils, those kind with the big erasers. That's to say that I think my colleagues around the table, when they submitted their dots, understand the world is changing quite quickly. And they didn't feel bound by them 6 weeks from now or 6 days from now in the event that their circumstances change. I'll note a couple other things. What I heard around the table was, as they submitted their modal forecasts, to be clear, this was more likely than not. This was more likely than their other scenarios. So I didn't hear tons of conviction. What I heard was the kind of humility that I think we should have. I did not submit a dot. For me, it's not helpful in the conduct of policy. I suspect by year end, as I mentioned in my opening statements, there'll be a review about communications broadly. press conferences, dots, meetings, and
He
the
doesn't
like,
want to do any of it.
transcripts,
Because what good does it do?
This will be part of that. I don't want to prejudge the outcomes there, but I'm pretty open-minded about what they could be. And I was just incredibly impressed over the last couple of days. My colleagues over the last 2 days, and frankly over the first 3 weeks I've been here, they've been very open about changes. Change isn't easy, change is filled with risk, but our number one goal is to get monetary policy right. The way to get monetary policy right is to deliver on the remit that Congress gave us, to deliver on price stability, and there was no disagreement on any of those points.
At the risk of possibly getting the same answer about task forces, communications, what is your feeling about these news conferences? Are you going to continue one after every meeting? Do you find them useful? What is the future for the way Kevin Warsh will communicate?
Well, this one's probably got another 15 or 20 minutes in it, so I don't want to prejudge the outcome.
I love it. That's short.
Press conferences can be a very useful way to communicate with households, businesses, and more broadly through using the likes of you. I had a great old mentor named George Schultz, and his mantra was press conferences are useful, but when you have one, you want to make sure you have something important to say.
Exactly.
I think we had something important to say about our commitment to deliver on price stability, our commitment to rethink practices with an eye of moving the Fed forward, and to give you and the American people a sense that these aren't idle thoughts, these are concrete thoughts, that we're going to seek out the best minds, both the best thinking inside of the Federal Reserve and the best people I know in business and economics and the academy and technology and the rest, to share their views. That's what we're going to be doing here, the pursuit of truth. I think we're going to come up with some new and interesting things. We made some changes today. I expect more changes to come, and some of those might well be worthy of a press conference.
Hi, Chris Rugaber at Associated Press. Thanks for taking our questions. Could you give us a sense of how you see inflation more in the long term? I know you may not want to comment on the ups and downs, but is this mainly driven by energy prices and the Iran war at this point, or do you have any concerns about underlying inflation pressures in the economy? Thank you.
So I can't do much better than the committee just did, so let me restate it. Inflation remains elevated relative to the committee's 2% goal, in part reflecting supply shocks that have driven price increases in certain sectors, including energy. The paragraph goes on to say, but to be clear, the Fed will deliver price stability. My own judgment is the committee spent quite a bit of time, not just in 2 days, but over iterations of a couple of weeks. That's what we're prepared to say about inflation, but the commitment to deliver is strong, unanimous, and unambiguous. And that's, I think, an important message. We've missed for 5 years, and we're going to fix that.
Well, great. And then just on the data task force and everything else, I mean, generally speaking, I think people feel the Fed looks at everything already. Certainly that was the sense from before. Is there data that you feel is not given enough weight? I mean, you mentioned the trimmed the mean in the past, but again, that's well known to certainly most Fed members. So what is that task force looking at, and what might be I mean, I know you don't want to prejudge the outcome, but are there examples of data that you expect might be given more weight? Thank you.
So you're answering my question, so let me say I don't want to prejudge the outcome. I also don't want to say too much about what they're going to do, because I still have a phone call or two to make before I've nailed down the people that are doing that. I'm interested in what the outside experts' view is on the subject. I'll say this generally. Most of the data that central bankers and other government officials in the United States consume come with old-fashioned survey methods, a national accounts of what the U.S. economy looks like that looks very little like the U.S. economy in 2026. Survey methods that don't have response rates that we need, asking questions that might have been quite applicable a generation ago that are less applicable now. So even inside of official statistics, I would be open-minded if the task force and our own best thinking had recommendations how those official statistics can be brought up to a standard of our time using new analytic methods. I'd also say this. almost every private company CEO that's running his or her business are doing so with real-time information that isn't subject to much revision, that is telling them what just happened at that very moment. As you know, there are normal, long and variable lags in the conduct of monetary policy. What we're really interested in is what's happening right now. What we're less interested in is echoes of history. And you're hearing from my answer that some of the data that we receive, that we're waiting on, the first Friday after the month, the payroll index or something else, that might be an echo of history that's quite useful on its third revision. We need to take those error bounds down because we have to make hard decisions in real time. I'm really open-minded that there is a lot of new data sources that we can learn from the private sector, from reforms in the official sector, and new analytic techniques that are far more refined than asking a simple question about whether
changing
something
the game.
was core or not.
They're going to change how everything's defined, and that can justify rate cuts. It's fascinating.
Mr. Chairman, Edward Lawrence with Fox Business.
But this guy's
So
problematic.
if you
I mean, he just
don't
wants to get the
give
job done.
A
Interesting.
lot of ongoing forward guidance. Won't the markets have more volatility, and shouldn't Americans have more access into what you're thinking going forward?
Good question.
So I think financial markets perform best when they react to incoming data. I think the financial markets work less efficiently when they ask a question, how will the Federal Reserve react to that incoming information? The more that markets are paying attention to what's happening in the real economy, deciding what's good data and what's less good data, the more financial markets can price what they believe is the most likely and what are the tail risks. Financial market prices are probably the most important source of information to guide central bankers. But when all the financial markets are doing is reflecting back what we've said, then we're taking the most important source of information and we're being blind to it. I'd like us to create a system where those blinders come off, where markets are following data that they efficiently think is reliable, and they'll be watching data, we'll be watching data. They'll come with better information through market prices to us. We can make more informed decisions with ultimately the goal that I said at the outset, deliver on the price stability objective that Congress told us to do and that we've got to get in the business of doing.
Yeah, if I could take you in the meeting a little bit. This is your first meeting. The board members seem fairly hawkish when you listen to, in general, when you listen to what they're saying. Was there any discussion of a rate cut going forward today?
There was one proposal on the table. There was no discussion of any other proposals. The discussion on that proposal, I would say, was quite limited. The group was unanimous and unambiguous on it. It has been the practice of this central bank and others to have a range of alternatives. Today we had one. I thought it furthered discussion, deepened it, and made it clear what we needed to do and how we needed to deliver. I wouldn't prejudge what happens in the future, but there was only one big subject for us. We took it on. We had a good family fight on it for a couple of days, and we ended up, I think, in a better place.
Thanks a lot, Claire Jones, Financial Times. Coming to this blind, reading this very nice short statement that I think we've all appreciated in the room, one might wonder why you didn't raise rates today, considering what you're saying here about the risks to US inflation and your mandate. I guess, why not, and what would you need to see in order to get to that place? And secondly, on your task forces, are there any best practices at other central banks that you'd consider looking at? Thank you.
Yeah. I'm glad they're in the practice of giving you two questions, because my answer to your first question was to be very curt. I've got nothing more to say than the statement itself. And to the point of the question I got before, market reactions to what we say unfiltered, I think is more helpful than having delivered a statement, me then improvising further upon it. Best practices of task forces. This is a subject I've thought some about. I've been on a task force or two in my life. Best practice, find the best minds. Ensure that the task forces have a range of people, both by backgrounds and predispositions, so they too can have a bit of a family fight. Make sure when you establish a task force that the group that's going to be the recipient of the information feels as though they've got some equities in it too. That's why we're looking for, haven't done the final roll call, some of the most significant talent we have in the building and across the reserve banks on each of these, and in some sense seconding them to this group for a period of some number of months, so that the leaders of the task force know what the most analytical central bank in the world thinks about that. They can reflect on it. And a final best practice, we're not outsourcing decisions to anybody. Administrations past and present, reserve banks have chosen a group of 19 people around the table. These will be our decisions. We can agree to some of the recommendations, disagree with others, have a good family fight about it. But what comes from them will, I hope and believe, make the discussion we have internally better, stronger, more of a dialectic, so that we can finally deliver on that price stability objective.
Just a quick follow-up on your markets point. If you look at 2-year yields, they're really suggesting that markets think more tightening is needed. Would that be your read on what the 2-year yield is saying as well?
We were in such a good place. This is why we don't do third questions, I presume. I'm not going to offer any commentary on market reaction over the last 30 or 60 minutes. What we've given markets is a new chapter for the central bank, some fresh thinking. What we've given markets and households and businesses, I think, is a commitment to ask ourselves hard questions such that we can deliver on the promises that we've made before. This is a lot of change for financial markets to digest. I wouldn't be particularly intrigued by how they react in the first several minutes or even first several days. What I think is most important is that financial markets, and at least as important, households and businesses know that this central bank will deliver on price stability.
Hi, Chairman Warsh. Brian Chung with NBC News. Thank you for taking our questions. So when you say that we've dropped forward guidance for the layperson, that might sound like the Fed's going to say less or offer less insight into where their borrowing costs might go. So for the person that maybe you might run into at the grocery store, where the price tags are rising at a faster pace than their wages at the moment, how would you explain it to them? I don't know if task force might be the answer there, but how would you kind of communicate this era, this chapter of the Fed?
If I told somebody in the milk aisle that I had a task force for that, I think that would be doing a very poor job, so I appreciate it. If I saw somebody in the grocery store, what I would say to them is that we cannot have a very significant effect on particular prices. The price of oil in the markets today, or even the price of a dozen eggs, that does not have first order consequences to what we're doing. But we do have a really important job there, and it's to make sure that those changes in oil or beef or eggs or milk don't broaden in the economy, don't have second and third order effects. That's our job, that's our commitment, that's our capability, and we're going to deliver on it.
And then is the Fed's relationship with the Treasury also under review? There was the normal breakfast meetings with the Treasury Secretary. Is that something you intend to continue doing? And have you had conversations with the President since you're swearing in?
So on the President, I don't have anything for you. With respect to the Treasury Secretary, he has been posting pictures of our breakfast, so I don't think I can deny that. The long tradition at the central bank is that the Fed chairman and the Treasury Secretary meet weekly. I think we've pulled off 3 of those so far. I believe he's overseas this week, so this will be the exception to the rule. I think they're very useful discussions. The central bank's objectives and our roles and responsibilities are quite delineated from the fiscal authorities. And in my view, monetary policy is independent in the conduct of what we do. But that doesn't mean we're not interested in what's happening with the fiscal authorities. The way I think about it is this central bank needs to have a wide lens, but a narrow remit. We need to be quite interested in what's happening in the world. I won't be breaking any news here to suggest I'm quite interested in what's happening in the Middle East. That does have some effect on our day job. It doesn't mean it's our responsibility, but I think we're going to keep a wide lens, and my meetings with Secretary Besson to this point have helped widen that aperture. So we're aware of things that could affect our day job, even if it isn't.
Steve
Steve Leisman, CNBC. Mr. Chair, thank you, Mr. Chairman. Thank you for taking my question. You had said in the before you became chairman that you thought productivity was a reason why the Federal Reserve could lower interest rates. Do you still believe that to be the case?
So the committee had a discussion of productivity today. AI came up. The way I thought about it before and socialized with the group is that artificial intelligence, the latest generation of general purpose technology, is perhaps as important a change in the economy and business and households that we've had in my adult lifetime. It is filled with both a huge opportunity and with risks. I take both of those very seriously. You may have heard me say before that AI is shorthand perhaps for American ingenuity. That doesn't mean that it's going to be easy. That certainly doesn't mean it's not going to be disruptive. But over the long term, my conviction, and I heard quite a bit of support for this around the committee today, is the United States is a winner as we go down this. The United States is ultimately going to be better off in that. Now, to bring that back to the conduct of policy, timing, scale, speed, implications for output and employment, it's one of the things we have a task force to do.
If you don't mind, a follow-up from the other side, which is that when you look at the strong job growth that's out there, the elevated inflation, GDP seems to be going pretty good, and the stock market seems to be soaring. Do you look around this economy and see the funds rate being restrictive?
So that's your second question. I'm going to give the same answer that I gave before. I'd say as I think about the conduct of policy, what matters is what's the effect of policy. Not what do we say, but what happens. And the best way I can describe it is it's uneven. I do see some restrictiveness in things like housing. It's hard to use those same words anywhere else. I'll just make one other point. You talked about one of our dual mandates on the employment side. I don't believe that we have a cruel choice. I don't share the view that was expressed a few generations ago that Federal Reserve chairmen show up at a podium like this and say, you got to choose. And you're going to have to decide whether you're willing to tolerate higher inflation to put more people at work. I don't believe in that. What I believe is if we do our job, we can make strong growth, low prices, and strong employment mutually compatible. And so what you heard from the committee today is we've got some work to do on the price stability front.
Nick. Thank you. Nick Timmeros with Wall Street Journal. Chairman Warsh, you've said repeatedly credibility is earned by delivering. If credibility requires delivering, the move would be to tighten, or at least to threaten to. Now, you didn't do that today. Why not?
That judgment you expressed was not expressed by any of the 19 people around the table. We'll be meeting in 6 weeks and we'll take up the issue again.
And if I could ask about AI, the build-out is generating enormous demand right now, CapEx, data centers, power. The productivity payoff may be further out. So in your judgment today, is AI adding more to demand or to supply?
It's a good question. At the central bank and an economics profession, what we spend most of our time doing is counting demand. It's easier. We can see it, we can count it, we can check it, we can revise it. What we do, though, is we infer supply. You'll notice in the second paragraph of what one of your colleagues described as a very short statement, we have a sentence on the demand side and a sentence about the same length on the supply side. They're both important. Just because we can count one better than the other doesn't mean we're going to favor one more than the other. With respect to AI and the growth of data centers and infrastructure around it, we're counting the demand side, and it is no doubt showing up in GDP figures. We can be less certain when we infer the timing and extent of the growth in the supply side. It may well be an intuition the supply side is going to expand, but it'll take longer. I just describe it this way. There's a race between supply and demand. Milton Friedman says that the only thing we know about economics is that there's a supply line and a demand line they ultimately cross. When they cross and what are the implications for policy? The good news for you is we have a task force for that.
Thanks, Mr. Chairman. It sounded like on the task force on data that you were looking at overhauling or completely overhauling the system of national accounts, the way the government mines the economy. Is that your ambition?
In a word, no. In a few words, much of this data gathering happens in other government agencies to which we owe a tremendous amount of respect, tremendous amount of deference. But if in the course of this we come up with recommendations, which Fed staff have already begun to develop, about things that they could be doing to help inform us as policymakers, we're not going to hesitate. Again, I don't want to try to delineate the four corners of the research of the task force on data, but I do think there will be a review of official statistics, and at least as important, a view of bringing the best practices from the private sector and new analytical tools made possible by AI, so we can forge these into a fabric that gives us better real-time information. So as I mentioned before, when we're making decisions that we'd say are real contemporaneous data, not data that we call contemporaneous, that's really an echo of history.
Okay, thanks. The other question I wanted to ask is related to the building renovations. Are you considering any changes to the renovations, the projects, just in light of the fact that they became kind of a political football in the last year?
I heard something about that. I don't think I'm breaking any news, but my view, when you show up at a new institution, you should go meet with the Inspector General, just as a matter of good practice. It's a practice that I hope to continue. I've had one meeting with the Inspector General, and he told me what I believe the world knows, which he'll be coming out with a report on the building and the building projects at some point later this summer. I'll be interested in reading the report. From my perspective, with a forward-looking glance, is there anything that we can be doing or should be doing from this moment until the completion of the project to do what we can to be good stewards of taxpayer money and make sure that we're delivering on the promises that we made? Some more work to do. You might not be surprised in the first few weeks. I've been somewhat preoccupied on other matters, but I promised to get to the full breadth of the Fed's tasks in the weeks ahead.
Victoria. Hi, Victoria Guida with Politico. So I know that you did not submit a forecast, but you are the person who is authorized to speak on behalf of the FOMC. So I'm wondering if you could tell us in the SEP, the increase in the expectations for inflation, is that all because of the Iran war? What was the discussion around what the expectations for inflation being higher and also potentially growth being slower?
So my read of what I heard in the room reflected, I must admit, in the SEPs, is half of my colleagues thought the policy rate, given all those developments, should be at this level or lower between now and year end, and the other half thought higher. That 19th voter was me, and I didn't submit one. There's a range of views on the questions of first and second round effects, no resolution or conviction, but we'll be meeting again in 6 weeks. I think we're going to know more then, and I think that my colleagues are very attentive to incoming developments between now and then.
And can I just quick follow up on the SEP? You said that you're still encouraging your fellow committee members to submit forecasts even if you're not doing it. So what do you think is the benefit of them doing it even if you don't?
That's the commitment that the FOMC made, and it's a commitment that I hope we live up to. Commitment we made was to deliver price stability. I expect us to live up to it. By the time we get to the end of this year, as I mentioned, I wouldn't be surprised if there was a new communications framework. There were some changes to the SEP. That's a committee discussion, a robust discussion. I think we'll have it. I believe we're going to come to a better mix of communications to deliver on what we promised, but I wouldn't want to prejudge what those are. But between now and then, I would continue to expect colleagues to submit their SEPs. Some of them, I think, believe that the practice is currently structured is okay, but I heard a lot of interest in real reform, generally about all these topics. You didn't ask it, but I'll answer. It was a pretty gracious couple of days, and it's been a pretty warm few weeks. The institution wants to figure out how we can do better. The institution's going back to first principles, and I'm encouraged that what we've done in the statement, what we're thinking about doing with respect to the SEP, that instinct towards a new chapter is a real one, and by the end of the year I hope we can put some points on the board both in form and in substance of delivering.
Go to Inda for the last question.
Thank you, Mr. Chairman. Andy Curran, Bloomberg News. Could you guide us through, please, some of the principles that guide your own reaction function, and tell us a little bit about the kind of conditions that you think when the Fed should respond?
It's going to be a very unsatisfactory answer to the final question. The Federal Reserve has a lot of responsibilities, not just in monetary policy, but in supervision and regulation, consumer affairs and payments. My own view is our credibility comes from delivering on what we're saying we're going to do across everything we do. I've devoted more time in my first 3 weeks to monetary policy than all those things. But the more we deliver on our promises as good supervisors and good regulators, the more benefit we get, the more credibility enhancement we have in monetary policy. When we deliver on our price stability objectives, which we will, the American people will feel as though the hardships that they've been living through in part because of inflation the last 5 years are in the rear view mirror, and that credibility will have dividends across what we do, and the institution will come to press conferences like this, always with an impetus to reform, always with an impetus to do better, but we're going to put some points on the board.
Mr. Chairman, strong labour data in recent months. How would you sum up the labour market right now? Do you see it as stable and as potentially a source of inflation? Thank you.
Yeah. So the committee, if I were to try to capture how the committee thought about it, the committee thought that the labor markets were stable. There were some people around the committee who thought that it was trending better than that. Trends matter more than data points. What's happening over 3 or 6 months matters more than any one data point, any one data release. And I'd say the jobs data has been moving in a good direction. If I heard one other thing around that subject over the course of the last couple of days, what I heard was that strong productivity-led growth is not something that we fear, but something we embrace. Thank you all very much.
Well, there you have it. Definitely a new sheriff in town when we're talking about, how the Fed's done business here. He referred. Let's just go through a couple of hot topics here, and then we'll look at some price action. But honestly, nobody knows how to trade this right now. Markets are relatively flat. We're seeing a little bit of pressure come into the equities because the dollar is going up. U.S. dollar index is up above 100 right now, so that's sort of a significant gain today, 0.75%. What I would say, a couple of points real quick. I didn't talk much during his engagement because it was actually interesting. This is a completely new way that the Fed's going to look to do business. The task forces, that's adding another layer into the decision-making. When these task forces come back with recommendations, they're going to be listening. The Fed's going to be listening, and he's going to be listening. So think about a task force and what that could possibly mean. They're talking about getting the best minds. That's probably going to come out of the private sector. I really don't see any way around that. There will be some academic types in there, but it won't be academically driven. The Fed's approach this last, he was big on the last 5 years, was sort of down on it. I mean, in a lot of ways, threw Jerome Powell and his processes under the bus. They said they want to get better. They want to be able to make decisions based on data that is relevant, that is current, that isn't just a historical, rendering of what happened last month or last quarter. That's fantastic. In doing that, they're going to start shifting away from some of those traditional tools. They're going to try to develop new tools. That was said also. The data points was going to be big. They were going to focus on different data, maybe even invent some new data. That's going to be fascinating on how that works, because if you could go to a think tank, and let's say the think tank or the task force comes back and says, okay, listen, all of a sudden your PCE numbers aren't really accurate. Your CPI numbers and your PPI numbers aren't really accurate. Here's why. then you can start making decisions, policy decisions that aren't really rooted in what the market knows, and that's going to drive uncertainty. I would imagine that one of these task forces is going to come back and say the crude oil prices and the inflation, that's going to be transitory. The idea being that crude oil is going to go right back down and the energy shock is going to be taken away once the Strait of Hormuz is opened. And you can sort of see how that fits in perfectly with your memorandum of understanding that's going to be signed supposedly Friday in Geneva. All of a sudden, it starts to make sense. They're going to make decisions based in the real world as opposed to this long-winded academic approach that we really saw out of Jerome Powell. Now, this is what I will say. Before everybody gets excited and said, oh, the Fed's they're going to get better, they're going to do work, they're going to do all these things. The same type of excitement surrounded Jerome Powell when he stepped in for Janet Yellen. And that was back in the day. That was during Trump's first administration. And I remember that. I was around, believe it or not, writing on it and covering it live. Not on live stream, but I was on a blog website covering it live, these meetings. And what I will say is there was a lot of optimism over Jay Powell and Jerome Powell. And what happens is over time, these guys wear their welcome out because you go through ups and downs, and Warsh will be no different. They're going to go through ups and downs. But like Treehawk just said over there in the How to Trade community, it looks like a new era has well and truly dawned. This is completely different. This is task-oriented. I mean, he said task force a lot. What is a task force? It means you got to get stuff done. It means they want to show results. When I hear terms like put points on the board, that means that there's a new sheriff in town, and they're interested in results. They're not interested in reading these long-winded academic things that don't mean anything. Forward guidance was my next point. Said several times that forward guidance, do we really need it? What does it really do? Think about it. What does it really do? What does forward guidance do? But it does nothing but drive the markets on an intraday basis. The dot plot, the forward guidance, it doesn't mean anything because they change their opinions day by day, seemingly, especially in this environment. So that, I think, is going the way of the dodo. I don't think you're going to see those dot plots. I mean, they might put them out for show, but they're not going to mean anything to the market anymore because it's not going to be what's important. And the other thing was the conversation about AI. That was interesting. I mean, of course, everybody's talking about AI and they believe it's the future, and it really is. Going back to the SpaceX launch and all, just how big that IPO was. Later this year, we've got Anthropic, we've got OpenAI. That's where finance is headed. That really is where finance is headed. That's where the big money and the big investors are going. That's where they're going with their capital. So I have so many questions about what this new program looks like, and all of a sudden, it just doesn't really matter. The bottom line is this. You had a Fed in there that was sort of passive. This is going to be a more aggressive Fed. It reflects a lot. I mean, it really reflects a lot of what the Trump administration promised when they first got into office. They were going to address some of these big problems. They were going to take them on head on and get results. Everything was results oriented. Well, a lot of that political stuff hasn't worked out real well. And you have an election year coming up. So the politics is one thing, but this Federal Reserve is interesting. So this guy, all in all, I think it's a breath of fresh air, being detail oriented and wanting to put points on. I mean, he had me at points on the board by the end of the year. I think that's fantastic. Hawkish, though, I will be honest with you, it is hawkish. He said several times about being committed to delivering pricing stability. Now, what does pricing stability mean? 2%? He didn't really say that. He said we're worried about to the left of the decimal point. So if it's 2.5 or 2.8 or 2.9, they're not going to worry about that. I think that's interesting. I think that the way that they're going to measure jobs, I think all of these old numbers and all of these metrics are going to go the way they're really going to be antiquated, and they're going to move on to some different types of analytics, which I think is refreshing as well. It's been a long time. If you'll notice the difference between that engagement right there and what we were getting out of Jay Powell was he was meandering and he was wandering and he wasn't saying anything. You actually heard this guy say something. And one of the things that I thought was really striking was at the end, there was nothing. He answered the last question very short and then left. And that's what we're going to be seeing. I don't think we're going to see these engagements, these FOMC pressers. I think they're gone. I think they're going to do it maybe quarterly, maybe twice a year. And I think that's fine. That's probably what needs to happen. Do we need these every month, every other month? I don't think we do. They don't do much to the market other than just shake up intraday price action. So I think that these are going away. But I really liked what he said about forward guidance. It doesn't mean anything. It does not mean anything. The data sets clearly are antiquated. What does PC even mean anymore? Is there a better way to do it? Are they trying to invent a better mousetrap? Yeah, I think so. So all in all, I mean, if I'm grading, I give probably a B plus, just because I'm not real big on economists and bankers in general. But that was your first, it was your first trip out. So what's happening right now in the markets? Well, we can see exactly what's happening. The dollar's on the rally. That came from his comments on we're committed to the inflation. We've got to get pricing stability back. That's what that's all about right there, and it's driving it higher and higher. Today we're up 0.83%, and accordingly, you're going to see things like gold. I'm talking through the trade, but this gold trade right here, you're seeing gold come off. With the dollar running this hot, I probably would just scratch all of them. I mean, I really would. Maybe you get a bounce here. Maybe you get a little TP right up in here somewhere, maybe 42.55, but still, even that's a really big move off of that support zone. I wouldn't be too married to any trades right now. The dollar's trending, and it's trending because it was a fairly hawkish statement, realistically. So, I mean, you could hold positions. I don't know that I would be betting against the dollar, though, right now. U.S. dollar, Japanese yen after the speech here. We're going right up to test that 160.72 level. Big zone. I don't expect it to hold. I think you're going to be making new highs. 162 for the dollar yen more than likely is going to be in play, and that makes me smile because we're going to have a chance to trade up there. The Bank of Japan is going to have something to say about it when this dollar yen gets that high, so watching that closely. Great Britain pound, Japanese yen. I mean, it's on now. I mean, it's on. A little bit of love there from the yen. Watching closely, but if we do get this sell signal, maybe a pretty good one just to take right off. US 30, this was relatively simple. I mean, this wasn't too hard. You're looking to play the bottom, really the bottom of this range. Somewhere in here, you were looking to play the bottom of the New York range, and now the markets are breaking loose and trending a little bit, so you don't want to be holding longs right now. Let's go to our 1 minute. Fairly successful trade. No two ways about it. Went right down to the bottom of your Wall Street range, your Wall Street low, traded down, sprung up, and now you're trending. So that was a pretty good trade that came across the board well. This NASDAQ 9 EMA trade didn't pan out very well. Looked great early, but when he started really talking about pricing stability, then you got something like this where it just came down and took you out, and that's the bottom line. You just got to have good risk management. Right here, SpaceX, not doing much, consolidating around 200. Big sell-off down to about 185 today, 181. Nice bounce up, right back up to 200. The game's starting to calm down at 200. You're seeing a consolidation period and some really good stuff happen with SpaceX stock, where 200 looks to be potentially a point of control. So we're watching that closely as well. But all in all, I mean, decent. I mean, I wouldn't really call it great trading. Like this trade, for instance, if we're looking to this gold trade for downside support to hold, I'm very highly skeptical. I mean, I would be in the camp of just scratching that thing and moving on. We had a pretty good one on that US 30, but this right here, something like this, I mean, you could let it bleed a little while. Maybe you get it to spring back to life and pay you off, but big picture, a stronger dollar is going to be tough on gold. It's taking silver down as well. Silver's off 3%, copper's off. WTI crude oil is holding firm right around 75. That's to be expected. Key number. So, long story short, the trading wasn't really good, and now we're starting to make the decision that, okay, the dollar is going to be the way forward. Is it? I don't know. So, new opportunities. Let me see. Nariak, the Fed may use AI. Yeah, the Fed's probably already using AI, but they're going to embrace all that stuff, and it'll be interesting to see the task force that comes out of it. You know what? Are they going to have an AI task force, the Fed? And are these AI task force people going to be building not just outlooks for AI, but are they going to be building new infrastructure for the Fed to use? It's fascinating. It really is. Let me see. Tina Jing, why is gold dropping? Because the dollar's up, guys. The dollar's up. The dollar's trending right now up above 100. And you can see gold. I mean, this just looks to me like a mess. I mean, I really don't care if it comes back. I'd scratch that right now. It's going to be more than likely we're going to trade down from here just because this U.S. dollar is dictating a lot of policy. Right up in here would be the area I would look for the U.S. dollar to stagnate. This is the DXY, the dollar index. Something like that could definitely stagnate right around 101.18. For me, that is the big dog. That's exactly where you need to be on the ball. When we get up here, if price goes above that zone, look out. That's for sure. All right, let's go ahead. We had a couple questions here. Euro USD, you're looking for a long scalp. Yeah, I don't hate it. I mean, monthly chart, you can see exactly what we're going to build here, a little Fibonacci action. right up there, and you can see what's coming into play. Big time zone, 113.54. That could definitely come into play anytime. As far as a long scalp right now today, boy, I don't know. I don't know. I think that we're fighting a trend right now. The market's definitely made its decision and broke. I'm happy to wait. I'm happy to wait. Now you're trading 115s, so I could see you're looking for a long Euro USD for a scalp from 115. I mean, I don't hate it. Like I said, I just don't. I don't hate it. I think you could do it for sure. You could do it. Buy market. I mean, you could send them long right here. 114.99. So what would your take profit be? Your TP be somewhere maybe 115.20, something like that. I would just be very careful because you are looking to break beneath those June lows and maybe extend a little bit. I think you'd be in better shape just waiting maybe for 113.50, 113.60 to come into play. All right, everybody, that was pretty good stuff. I mean, I was more interested in listening to this guy talk because he was actually saying something. It wasn't just Jerome Powell platitudes. I think we were all getting pretty tired of those by the end of Powell's era. Remember that Powell is still on the FOMC. He's still in that boardroom arguing for policy one way or the other. It was also refreshing to hear that they had some good old-fashioned family disagreements, which means they were fighting it out in that room. That's good. They need opinions in there. They don't need just a bunch of folks that sign off on whatever. The last thing I'm going to say is this breakfast, this Treasury Secretary breakfast. There is the Treasury Secretary, Scott Bessent. That means once a week, Warsh will be meeting with Bessent. The idea that the United States Federal Reserve is truly its own independent entity. You didn't really hear Warsh say that today. And that was something that Jay Powell said every single meeting. I mean, every meeting he said, we're independent, we're not influenced by the government. Well, Warsh didn't really say that. He said that, yeah, we're going to have some task forces and we're going to bring in the best minds. And so it was more of a situation where they're going to listen to everybody. They're going to build out an organization that's a little bit bigger. Ultimately, he said the buck did stop with them. It is their decision policy-wise. But when you start thinking about what exactly that can mean with regards to interacting with a task force, maybe people from the government are on the task force. We don't know yet. We absolutely have no idea. Scott Bessent might be on a task force, but he's having breakfast with this guy once a week. That tells you that there is a relationship there between the government and the Fed. It's tradition, so it's not really anything new, but I'm interested to hear what exactly the relationship between Bessent and Warsh is moving forward. It may be a real strong one. It may not be. Just really depends on what the Fed does. CME Fed Watch. Here's your updated statistics for the end of the year. I think it's important that we understand that these are going to change. 97.3, that was for today. Let's go right there to December. The idea was to put points on the board by the end of the year, and now we're sort of shifting into more of a hawkish tone. We were at about 45% right there to stand pat, and now we're starting to go into maybe some rate hike territory. So interesting type of a dynamic developing with regards to our interest rate expectations at the end of the year. I have no idea. We have to see exactly what the tone is from these task forces. I'm not sure. I mean, they're meeting again in 6 weeks. Does Warsh come out here and give another presser? I don't think so. It looked to me like he says, listen, these things don't do any good. I'll answer your questions, but they don't do any good. And he's right. They don't do any good. There was one combative question in there, I thought he was going to take a lot more heat. But there was one combative question that was from Timoros, and he was asking something about why he didn't hike interest rates. Well, why didn't you guys raise interest rates? Real matter-of-fact answer from Warsh, and I thought that was definitely one of the high points of his press conference. Spoke a lot slower than I do, very measured, very delivered, but he was right to the point. And it wasn't just your standard Jay Powell, we're in a great place, policy's in a great place, we're doing a great job, he didn't say any of that. The tone was, we got to do better. And that's exactly what the administration's looking for. That's exactly what the people are looking for. And probably scored him some brownie points. Does that mean a rate cut's coming? I think they're going to adjust the data points and build a case for rate cuts sooner rather than later. But whether or not you can get it with the inflation that's been brought on by the energy spike this summer, at least, I don't see it. The good news is with this memorandum of understanding between the United States and Iran, they've probably got about 60 days to figure things out, and I really believe that's going to be the goal. They're going to want all these systems and all this stuff to come together before the election. So the next 60 days are big. Crude oil prices, the goal is going to be to get those as low as possible, reopen the Strait of Hormuz. A couple more AI AI situations where we're going to have big IPOs. Anthropic, OpenAI, they're both having IPOs this year. Those are both they're going to need to be really big, and I think that they will be. And so with everybody supporting AI right now, including the United States Federal Reserve, I think we're on the verge of a new era in finance. I really do. The SpaceX IPO showed us that. All right, everybody. I've gone on long enough, but you're definitely seeing a bearish tilt to the market right as we roll into the close. About 30 minutes left before we get the closing bell ding ding in the United States. We're down about 462 points there in the Dow. The S&P 500 is down 83, and the NASDAQ has took a turn for the worse, down about a 168. Still, though, these aren't big moves. You know, we read the point totals out. They're not big moves anymore because the indexes are valued at so much. I mean, 51,000, 7,500, and about 30,000. Those are really lofty valuations. And all of a sudden, those big, well, I mean, a 500-point move, it's just not really big for the Dow anymore. It's just not. So I wouldn't look at that so much as just the sentiment. See, right now the dollar continues to trend. You can see you could definitely run into trouble here trying to scalp something like this Euro USD. I would really be just ripping the Band-Aids off right now because this is moving. This is moving. 100. We're moving against the majors, really strong. What's going to be fascinating here in the next 12 hours, next 18 hours, is going to be the BOE and the SNB. So there's going to be a lot going on the Forex. I don't really expect to be diving into the Forex here anytime soon. I really think that tomorrow on the U.S. session live stream, we'll cover all the latest. I'll recap the SNB and the BOE, but I think there's a new sheriff in town, and the global central bankers, they're going to have to probably react to what's going to happen here in the United States, and I don't know if they know how to do it yet. So when we're talking about Forex volatility, we're going to see a lot of it. We're going to see a lot of it, that's for sure. All right, everybody, I've droned on long enough. I wanted to give the initial press conference for Morsh. I didn't heckle him or really I used to have fun just heckling Jerome Powell because he wasn't saying anything anyways. But Warsh was actually saying a few things. He was outlining a new game plan. So, like I said 50 times already, but there's a new sheriff in town. They're going to completely overhaul the Fed systems, their practices, and that's going to bring a high degree of uncertainty to the Forex market. You're not really going to know what the Fed's going to do as clearly as we have. So that FedWatch index, that thing's going to be moving around a little bit. The derivative traders are going to have a little bit tougher job trying to price Fed policy in the future. And right now, the markets are diving because the dollar's rising. Everybody's sort of hitching their wagons to that. We're going to restore pricing stability. We're going to restore pricing stability. And the last thing I'm going to leave you on this note, when he talked about how the last 5 years have unfolded, that was big. That's what I say every day, going back to COVID, the new COVID era of global finance. For Warsh to address the last 5 years in sort of a disapproving tone and saying that we're going to change it, that's big. That's very important because the last 5 years and what they did with unlimited quantitative easing and what they've done in the real estate market, it all rotates around monetary policy. And in my view, it's been an abject failure. The inflation was not transitory. It is entrenched. How can the Fed address entrenched inflation in the near term? They haven't raised interest rates yet. I wouldn't have raised them today. Too much pressure on the markets, especially with a 10 U.S. deal between U.S. and Iran. You wouldn't raise interest rates right now. But next time, maybe the following, they're going to have to consider it. That's for sure. A lot going on, guys. It's going to be fun. I think it's going to be a lot of fun. We just got to make sure we're on the right side of the U.S. dollar move. Remember, one last tip. When you're in the Forex and a Forex pair starts trending, it's not like commodities or even equities where we can maybe play against that trend a little bit. We got to wait. I would wait for confirmation that the market's turned because a trending market can eat you alive, and we're seeing it right now. Dollar yen, that key level's gone. That yearly high right there was 160.72. Let's take it down to a 1-minute chart. What happened at that high? Boom. Compression break. We're going north. 162 sells. I know it's way up the queue on a 1-minute chart. That could come into play very, very soon. 162 sells. You got to really like that level to short. I would say even 161.75s could be really great. That's for sure. Could be some great opportunities yet to be traded. Absolutely. All right, guys. This thing's been a marathon stream. I'm going to go ahead and sign off for right now. I'll be back tomorrow with the FX headliner trading the Swiss National Bank. and BOE fallout. I think that's going to be key. We're going to look at those Swissy pairs. We're going to look at the Great Britain pound pairs. We're also going to look at Kevin Warsh and see exactly what the markets are saying. We'll do a little more homework on him, maybe his affiliations with the financial community, but I'm interested to see when they bring these think tanks in, these task forces, they're from the private sector, and they are detail-oriented and task-oriented. That's why they're a task force. They're going to want to get things done, and that to me is probably the best, or not the best, but the greatest change or the greatest evolution in the Fed that we've seen in the last decade. No question about it. That's a wrap, guys. You have a fantastic trading session as always. Trade the action well, and we'll talk soon. See you. Traders all over the world are already using Switch Markets. Thousands of traders just like you across multiple markets each and every day. If you haven't joined yet, you can open an account and begin trading in just a few minutes. Click the link in the description.
What am I doing? I told myself this year was going to be different. So many things I want to achieve, yet I'm here wasting my time doom scrolling. I was going to start running again. I was going to make more of an effort with my friends. I was going to work on my confidence. I was going to get fit again. I was going to start trading. Time to wake up and stop making excuses. Okay, Switch Markets. Let's do this. When you're ready to trade, Switch Markets is waiting for you.